Welcome again, everyone, to this Hidden Gems ShareCafe webinar. Not much to report today. All eyes remain on the US election tension and expectation of further Chinese trade tensions with Australia. Now, that may be possibly inflamed by Trump. He's just come out and banned US investment into Chinese companies. Let's not forget there's still record COVID cases in both the US and the United States. Now, this is all against the background of mixed earnings in the ASX 50, which is actually down around 10% for 12 months. And the Small Ords, surprisingly, is also down around 2.5% for the 12 months. For some investors who are chasing yield, they've been belted. You've got the banks down somewhere between 10 to 30%. Telstra is down around 15%. No wonder there's a wash of liquidity in the small cap sector. Investors are chasing returns. And this is where our webinars really provide some valuable insight for investors looking to find the next hidden gem. Today's CPD accredited webinar, we are discussing gold, base metals, brain health, and home fragrance products. If you want to type in a question, please do. The CEOs really love to interact with their shareholders and potentially new investors. All these webinars are now hosted on a ShareCafe YouTube channel. Right, first up, we have Dusk Group Limited, ASX code DSK, market cap of around 100 million. Now, every woman I've spoken to about this company knows this brand. The company is an Australian specialty retailer of home fragrance products, offering a range of Dusk branded premium products at competitive prices from both its physical stores and online store. We have with us the CEO, Peter King. The company hasn't been listed very long. Peter, thanks for your time and congratulations on your recent listing.
Thank you, Tim. It's good to be here. Okay. What I'd like to take you through now, everyone, is half a dozen slides giving you a snapshot on Dusk, recent, past, current trading, and where our growth pillars are. So on the top left of our business snapshot page, you'll see, going back to F17, some consistent ongoing sales growth from F17 through to F20. And to provide as current as possible for the prospectus, we did an LTM forecast there to the end of September, which to $109.9 million. And across the top, you'll see our comp store growth. So we've been posting consistent comp store growth now for 40 plus months, coming into our 14th consecutive quarter of sales and gross margin dollar increases, same stores, not counting the new net stores that we add to our network. So what is it that we sell? Yep, we started off as a candle company and we will remain to be the market leader in that segment. But as you can see on the chart on the top right, 2/3 of our sales come from outside of that candle business. And that's a deliberate strategy of mine to diversify the product offering to our customers. The simple fact of the matter is, though, we're a fragrance business. We're a home fragrance and personal space fragrance business, whether that's delivered by candle or a reed diffuser or our more tech ultrasonic diffusers, which is the fastest growing segment that we have in our business. On the bottom left, you'll see our growing store network, steady, consistent growth, improving retail margins and lower rents as we negotiate harder, and the swing in momentum, the swing in strength in those negotiations swings from landlord to retailer. I can say that we are now trading, as per our prospectus and management update, trading update, we've now got 118 stores operating for peak Christmas trade. And on the right-hand bottom right, one of the pillars of our success has been a rewards program. So we now, at the time of this slide, we were at 525. We're now approaching 560,000 paid up members. Each member will pay us $10. And in that period, they'll receive a suite of benefits. And we get a rich source of customer and transaction data to leverage. Next slide, please. So the investment highlights, category leader in a growing market. We are leveraging the current tailwinds to deliver some strong sales and earnings growth, and I'll touch on the trading update that we issued on our first day on the market on the 2nd. We're the only vertical retail play, and we'll talk about margins in a moment. So our relationship goes from factory floor to shop floor, provides us with agility, makes us nimble to respond to customer trends, and it underpins and underlines our very high margin, as we should have as a specialty retailer. We only have Dusk products. Unusually for a retailer, we don't buy product. We develop all of our product ourselves. We have a team of 8 product developers, 2 graphic designers in-house to provide us with 100% fully differentiated product. We don't price compete. So when a customer falls in love with our fragrance, the only place they can buy that fragrance, in a candle or a diffuser, ultrasonic diffuser, is at a Dusk store. I've mentioned before about our Dusk Rewards program, 500,000 plus 560,000 and growing Dusk Rewards members. Since we reopened post-lockdown in May, our sign-up rate for Dusk Rewards is 35% higher than it was for the previous corresponding period. That's some of the cheapest customer acquisition I've been involved in my career, and the retention of those customers is being shown now as we trade through into Christmas. Omni-channel, store network growing, as you mentioned before, and our fastest growing channel is online, which continues to take share as we invest in skill set and platform. And as I mentioned before, a track record in growth and profitability. The only stat not on that page is our comp store performance of 43 consecutive months of comp store sales growth. Yes, we've got tailwinds at the moment, but this is a business that's been growing steadily, sales and earnings, now coming into the end of its 4th year and into its 5th year of steady growth. Thanks. Talked about results before. Here's our pro forma EBIT, excluding JobKeeper. So our growth in EBIT has been consistent with our sales growth, our store network expansion, and our online channel growing. So we've seen some strong tailwinds, yes, but again, our LTM, our FY20 number was 13. Our LTM net of any JobKeeper benefit, 17.8. Our compound annual growth rate from our store network is there on the right. And importantly, I think, and let me refer back to the fact that Dusk is a vertical model, the only vertical model in the category. Despite the Australian dollar depreciating, our margins have hugged those mid-60s in that period. We've negotiated hard on lower COGS. As our volumes have increased, we've gone to our supplier partners, had lower COGS to offset currency, and we've had price increases where we've offered new to the company, new to the market, highly differentiated product. On to the right, our average transaction value growing 38 to 40 to 45. And I can report that in October, as per the trading update, we had further increases in our transaction value as our customers shift in, new customers shift into the category and purchase up for the first time. Please. Who is our competitive set? Well, our customer is typically female, 25 to 49, suburban. Dusk has no stores in any CBD location. We've not been impacted by the close down in those major commercial centres at all. We operate in suburban malls, and our competitive set, department stores first and foremost. It's not a bad time to have department stores as a direct competitor. And as you move further along to the right, the amount of floor space and focus given to our category, home fragrance and fragrance for your personal space, drops off dramatically. We see us winning on service, on product specialty, and our brand. We measure the brand effectiveness as the promise that the brand makes and the performance that the brand provides for our customer. We make a promise that we are affordable everyday luxury. We must be performing because our comp sales have been growing for 4 years and our new stores are performing above their pro forma. So that's the competitive set we operate in. Traditional retail, wholesale to retail, old model, whereas Dusk is vertical with a growing online channel. Thanks. Our store operating metrics. We've got here our CAGR rate for sales 17 to 20. We've got our new store, our net store openings there on the right. And those closures have typically been pop-up stores where we've gone into the centre in a temporary state, waiting for our full store to open. On the bottom left, you'll see our store contribution, averaging in there at about $320,000 per store. Dusk has no net loss stores. We have no negative contribution stores. All stores in our network are profitable. Critically, in terms of working capital usage and the cash generation of the business, we're looking at a payback of under 12 months for our new stores. We're doing that by negotiating hard on rent because we've got high margins, we've got growing average transaction value, and more our centres are contributing to the fit out of the business, which is driving down the amount of cash we need to commit to open stores and lifting the return as we continue to trade strongly above pro forma and when those stores become comp stores. Our online business, we're getting towards the end now with an eye on the clock and being respectful of the time. It's our fastest growing channel. We can see our online sales there on the top right, again, growing sharply. Our online penetration of sales at 9% at the time of writing. I can say that as per the trading update, we provided October was 11% of sales. So we're seeing a continued, steady, profitable climb in online, and at the same time growing our comp store sales in our physical store network. Again, a lot of concern in retail has been, if you're growing online, are you penalising bricks and mortar sales? That's simply not the case for us and hasn't been the case in the last 43 months. When a brand is strong, you don't need to invest as much. So 73% of the traffic that comes to our site is unpaid. So as we see, comp store growth, strong margin performance despite a depreciating currency, which will provide a tailwind now as it reverses up. A pipeline of stores, we see another 25 to 30 stores sites that we've identified in Australia for us to target in the very near future. Well, I think that's close to my 10 minutes, and I might pause now for Tim for any questions.
Yeah, thanks, Peter. We've got a few questions, and thanks for getting straight to the numbers. The plan to list. Why the reason to list just recently?
We were in the market ready to go earlier this year when everything changed in Feb, March, Tim. So what we've really done in September, October is finish what we started in Feb and March. And back then, we were talking about 30 to 34 months of comp store sales growth. Now we're talking about another 8 or 9 on top to make the story better. It was simply a case of being interrupted by COVID.
And what sort of boost did you get by COVID? I would understand increased sales. There's probably JobKeeper. There's probably rent reductions. How does it look moving forward out of that environment, given your growth?
Oh, look, April was when the stores closed was certainly not a net benefit. But from then, when we closed late and we reopened early in May, I think we were open amongst the first to reopen. So yeah, we've been trading strongly, and as per we can see the lift that we've got. So EBIT was growing strongly pre-COVID. It's just grown very strongly post, and up to October in the trading update where we were 44% comp growth in October. So again, that's a strong result in retail land.
Sure, and coming into Christmas, of course, there's a question here. You've got this kind of vertical approach, online and stores. Is there a target number in terms of stores within Australia, and what are the overseas plans?
So we've got a target of up to 150 sites in Australia. We're ahead of schedule at the moment at 118 coming into Christmas. We've identified sites in New Zealand. I was in Auckland, are ready to sign deals in Feb of this year before everything changed. We'll be back over there, and we're targeting to be back in the New Zealand market for Christmas 21. So 12 stores in New Zealand, target 140 to 150 here in Australia. And offshore, we'll probably use a beachhead for online first and foremost, but that's kind of an horizon too. We've got plenty of runway for comp, new stores here and entering New Zealand.
And you spoke a little bit about this subscription model. Is there plans to expand on that? I can understand the rich sort of data. What are the plans for that?
Well, we've got a new online platform. We've got the shiny out of the box Magento platform to launch in March of next year. That will allow us to do a subscription model to our loyalty members. Our loyalty members are about 60% of our sales. They spend about 30% more than non-members. So every time we sign someone up, they pay us $10 for the privilege of being a customer and getting those benefits for the next 2 years, because the life cycle of the program, each member is $10 renewal every 2 years. So that's an intent of future purchase. So there's a gross margin benefit for sign up. We become part of the repertoire that they use for personal home fragrance and for gifting Mother's Day and Christmas. And that rich stream of data that we get from them, we're now utilising to some, honestly, not great effect, but to some effect. And I've added headcount and expertise in the last 2 or 3 months to leverage that as we move out of into the second half of the financial year with the new platform.
And I suppose that subscription model ultimately reduces your cost of acquisition. What is that cost of acquisition?
Our cost of acquisition at the moment, it's simply the rental and cost of the stores divided by the members that we sign up, and the online signs up more members than, of course, any of our stores. But our cost of acquisition is actually a sunk cost into the running of the business. It's a KPI to sign up a member every 5 transactions in a store, and our store managers are bonused on that KPI. So in effect, it's a self-funding customer acquisition, and the growth that we've had since we've reopened has allowed us to hit that 550, then blow past 560,000 members, way ahead of where we thought we would have.
Sure, I mean that's a big number, but is there an online advertising model to acquire new customers?
Yeah, there will be. We will be after Christmas. Our focus at the moment is all about execution for November and December to absolutely hit this out of the park for November and December, and then we'll look at executing with our new platform. The timing's all coinciding with having the integration between loyalty, online, and online acquisition, as you mentioned before, Tim. That's the focus for Q3, Q4. So
essentially that 550,000 client base has been picked up organically.
Yep, 100%.
Yeah. That's a great number, Peter. Congratulations. That's all we have time for. Really appreciate your time. Good luck with your ASX future.
Thanks very much.
Okay, next up we have Venture Minerals, ASX code VMS, market cap of around 43 million. Stocks had about 120% return over the last 12 months. The company engages in mineral exploration business in WA for nickel, iron, cobalt, base metals, lithium, copper, silver, gold, lead, and zinc properties. They're going to keep you busy, Andrew. We have with us Venture Minerals Managing Director, Andrew Radonjic. Andrew, thanks for your time.
Right. Thank you, Tim, and good morning, good afternoon, good evening to all the listeners out there. So just going through the highlights. Venture at the moment is building an iron ore mine on the west coast of Tasmania. So we're looking at first shipment towards the end of Q1 2021 at Riley Mine. We've just recently had some great exploration success at Golden Grove North in Western Australia. First 3 drill holes at our Orcus prospect underneath a drill intersection of 22 metres at 0.8 gold, 0.6% copper, 1.3% zinc, has hit significant zones of sulfides, and we're along strike from, I suppose, one of Australia's major VMS deposits in Golden Grove. I'll talk a bit more about that. Post the drilling there at Golden Grove, we're looking to take the rig across to Coolum Project, 250 kilometres east of Perth, and we've got what looks like potentially could be a Boddington style target there. We've got a great joint venture with Chalice, who once they'd made a Julimar discovery, had recognised the potential of our Southwest project, so we're going to be testing out what looks like a Julimar lookalike. And what's been, I suppose, the flagship of the company for many years, since 2007, the Mount Lindsay tin tungsten project. So we've got exposure there to EV metals with the tin and critical minerals with tungsten. Next slide, please. Thank you. Current market cap's around that $43 million figure. We've got 5 in the bank. Major shareholders of Republic, which is an investment fund in Singapore. And also we have Dale Elphinston, who's obviously famous in Tasmania for converting Caterpillar equipment to from surface to underground. So he's second biggest shareholder. Next slide. The board there, it's same people have been involved since the start of the company, which was listed in 2006, which means we've still got all that knowledge and experience and of the Tasmanian assets at Mount Lindesay and Riley, and hence we were able to start looking at Riley quite quickly once the iron ore price came up early last year. So it's good to have that team still there help us move forward. And obviously got a great track record in other companies and discoveries, Australia and internationally. Next slide, please. The first now onto the Riley iron ore mine. The next slide again. The project is based on the west coast of Tasmania. Highlighted there in red is a 120 kilometre long bitumen road to the port of Burnie. Riley has all the permits in place. We have road access and port access, and we've engaged Shore Contracting to do the mining, a local mining and civil contractor, and Cube to do all the transport and ship loading at the port of Burnie. Thank you. Riley is very simply a 1.5 metre thick laterite deposit draped along the landscape. Its entirety is sitting there on the screen at the moment. It's 1.6 million tonnes. It's the same grade as FMG's super special fines. So it's an ideal product. So as you can see, it's a no strip ratio. So very straightforward. Next slide, please. The project, and there's another picture there of a Caterpillar excavator digging the top of the ore zone, that loose gravel. We trialled dry screening earlier this year. That was successfully completed, but we're forging ahead with building the wet screening plant. So the raising we did recently is focused on getting that plant into getting commissioned by late January next year. And so the dry screening wasn't as cost effective as the wet screening, so the board's chosen to stick with the original concept. The project, just in terms of numbers, in 2019, back in August, we had a feasibility study completed at $90 US, and the project made $30 million. At today's price, we're looking probably double that amount. But the main focus now for the company is to get that finalised, that financing for the wet screening plant. Next slide, please. And once that is secured, then we can get the plant completed. That's a picture there which shows the construction a couple of days ago. It's a nice blue sky and on the west coast, which in itself is a bit of a rare thing, but it's good weather to be building, and we're going to be pouring concrete next week. So it's we're certainly starting to look like a mine site. First haulage will probably be around about that early February. Like I said, first shipment sort of targeting mid-March at the moment is in schedule. So great opportunity for the company to become a producer with this project. It's a small niche project. It's capped in high iron ore price. So great opportunity for us to establish, I suppose, a base load valuation around that $30 million or whatever the project is netting out at that point in time. Next slide, please. Now just moving on to the Golden Grove North project, which is our main exploration play back in WA. And we picked up this project back in October 2018, purchased it from prospectors and other private groups. And no one's had this sort of 300 square kilometres sitting north of Golden Grove in their own possession, probably for a number of decades now. So it's a rare opportunity. There's been exploration for obviously back in the 90s, we had exploration for VMS style, again, just shallow exploration in a lot of the holes. 900 of them were, not many went below 100 metres, and some drill for iron ore, some drill for gold, some drill for nickel. So it's a real hodgepodge of data. We had to work our way through those data sets to start generating our own targets. Next slide, please. And what we saw is that with surface mapping, rock chipping, we started delineating some targets there like Neptune to the south, which is, believe it or not, drilled by Dalrymple back in the 1990s, and the project was Golden Grove North as well, same name, so by coincidence. We also had the Vulcan targets, which we did some EM on, and we started getting some EM anomalies sitting underneath some very interesting surface anomalies in terms of zinc and copper, and some similarities to other prospects. So just moving on to the next slide. What we've done post that airborne EM is to do the surface EM. We did that at Vulcan West and Vulcan North and Vulcan, but then we, back in mid-September, acquired the what we now call the Orcus prospect. In Orcus, we've just only completed the surface EM, and we've got a plate there which is about 800 metres long. The drill hole, historic drill hole that I mentioned previously, sits at the northern end of that plate on the edge of it, and we've drilled those 3 holes on that line at the moment. But we've been expanding our, because we only did a bit of surface EM on around Vulcan West, Vulcan North specifically, we've been filling the gaps. So as you move from Orcus to Vulcan North, we're finding more strong conductors, and we're also going to push towards the south. So it's looking like a 5 kilometre long VMS type of target zone. So it's akin to what the Scuddles Gossan Hill area is like. So these VMS deposits tend to occur in clusters, and we're starting to see the early evidence of that. Moving on to the next slide. There's the first hole, first metre into the mineralisation, and we've got up to over 50% sulphides. With certainly the portable XRF is indicating that there's zinc and copper in those sulphides. The assays are now, samples are in the lab, so expect some results in the next 2 to 3 weeks in that first batch of drilling. The next after that area, we moved on to the south, but just talking about these holes on Orcus in the first line, you can see we're at 22 metres at 0.8. The drilling was done by an iron ore company, step depth down to 60 metres, 1 kilometre long spaced lines. They hit some sulphide, they assay them, and those are the numbers I've got in front of you on the screen there. But to drill below that and hit 33 metres of sulphides, and then another 23 metres below that again, and then 69 metres of sulphide mineralisation was pretty successful, pretty exciting for the group, because we managed to get down dip extension very quickly. The next hole will be a diamond hole, being beyond the capabilities of the rig we have here. But what we're going to do is we're going to move to the south and drill 300 metres away, and that's the central anomaly, which is the strongest part of the EM and also of the soil anomaly. So we're on there at the moment drilling, so look forward to some news in the very, very near future. Next slide, just touching on the other prospects. Vulcan, that an EM plate sitting underneath a 23% rock chip on a Gossan rich in copper. The soil anomaly is a pretty exciting target. Next slide, please. Then we've got the Vulcan North, if you look at the bottom left-hand image there, that cross-section of Scuddles, the discovery story around that is based around a pulse EM, a very early, late 70s version of that, and that picked up the copper lens, not the zinc. Zinc doesn't show up in EM. But more importantly, we had a very, there's virtually no anomalism in the drilling directly above it. So it's kind of off to the hanging wall position side. You can see that 0.1% zinc envelope. But you can see very similar Vulcan North and Vulcan West, the same sort of picture. You've got EM plates underneath that. So they look very, very similar to the Scuddles story. Next slide, please. We've also then just touch on Coolin very briefly before I finish up. But the Coolin is an anomaly which is very similar to the Tampia area, which is just to the north of us. And we've got some results up to 400 ppm gold. So we're looking forward to drilling that next. And next slide. And just to recap, that area there was pegged originally for nickel PGEs. And we've got Anglo America drill all around it, post the Julimar discovery. And that's pretty much it for me today. Looking forward to hearing from questions there. The Chalice story is something that will emerge over time. And certainly we're looking forward to that first shipment at Riley, putting results out for Golden Grove North, and then obviously looking very forward to drilling at Coolin. Julimar will start to see Chalice delivering some news to the market early next year, and then later we'll, with the funding from Riley, look at maybe getting the Mount Lindsay project, depending on success of Julimar, etc. Build the tin tungsten mine in say 2 to 3 years' time. Thank you, Tim.
Thanks, Andrew. You've got a lot to get through there, so sorry to rush you. Just on Chalice, there's a question here in that regard. They're obviously a big name that have done well. Do you have a start date for the Chalice participation at Thor, or is it still intended for later this year?
Look, Chalice have got onto the ground now, and what I didn't sort of say is that we've already done the EM. We've done a fair bit of soil sampling at the surface. But we were looking for VMS targets. They're heading with, I suppose, a view on a nickel PGE in it, because that was only discovered earlier this year. We hadn't looked at the project from that perspective. So Chalice will use their expertise to look at that, and I'm expecting them to be on the ground doing ground-based type work, maybe more soil sampling, and then hopefully move on to land-based EM. The airborne EM we flew, we got 6 kilometres of anomalies at the southern end, which is very similar to what Chalice have at Julimar. But the northern end, we ran into some infrastructure like power lines and TV transmitters or telephone transmitters. So I expect them to sort of get that groundwork done, and hopefully we'll see the rig out there in the first half of next year.
And of course, you're a geologist by trade, which I didn't mention in the introduction. So how do you prioritise your CapEx between these projects and obviously different resources?
Look, yeah, that's a constant challenge for the company. We do have a lot of projects. It can be a blessing or a curse. At the moment, this market seems to be more of a blessing. We've got I suppose a quite boring period where you're building an iron ore mine, and as a consequence, we're doing exploration at Golden Grove North is kept the interest in the share price, which is great. The building won't take long, for like I said, 3 months. But the idea is that we're drilling away. The last raising, we sort of put up around about $1 million aside to look at Coolum and Golden Grove North. But Riley's where all the other the remainder of the funds are going. And this is the reason why we did a joint venture with Chalice as well, because we have a plethora of projects, and if you want to try and realise some of these assets early, and you want to get sort of guys who are experienced with especially in Chalice's case, with the work they did at Julimar, then we can bring those discoveries forward. And we've got a 30% hold position there, where if we make that $30 million, for example, out of Riley, then do we use it to build the Mount Lindsay mine, or do we use it to hold a 30% position in the Julimar project, in that Julimar lookalike project down at on our southwest tenement? So yeah, it's the priorities continue to move. If I get 10 metres of massive sulphide tomorrow from Golden Grove North, then we'll have to jiggle things around and see what the focus is. But get the funding sorted for Riley, and then things should move forward from there.
And from an outsider looking in, is the funding, where does the funding come from, and is the plan to have JVs and those sort of developments moving forward?
Yeah, I think just the question broke a little bit, but look, the JV going forward for Chalice, I think your question was about, Tim?
Oh, about how do you fund all these different projects moving forward? Is it a JV strategy sort of? Well,
look, in terms of like all situations, Tim, it depends very much on funding at the time. It depends on the asset. Like in the case of Tor, it was going to require severe drill out. There's a lot of targets down there, and it's sort of like requires a fair spend, which the company was pulled towards developing the Riley iron ore mine, and the idea was to generate funds so we can sort of minimise dilution for shareholders. If we're successful at Golden Grove North, it'll depend, I suppose, on the level of that success and whether we can go it alone. Obviously, we've got neighbours there in Earmark Capital at Golden Grove would be very interested in extending their mine life down there. So that's an opportunity for us potentially. Or at Coolin, if we come across something decent there, then likewise. But we always consider these things and trying to obviously get the best bang for our buck for the shareholder.
Great, Andrew. That's all we have time for. A great story. We'll keep an eye on. Thanks for your time.
Great, thank you, Tim.
Okay, next up we have Cogstate Limited, ASX code CGS, market cap of around 167 million. Stocks had a 1-year return of up 200%, a lazy 200%. The company is a leading neuroscience technology company optimizing brain health assessments to advance the development of new medicines and to enable earlier clinical insights into healthcare. We have with us the CEO and Managing Director, Brad O'Connor. Brad, thanks for your time. Over to you.
Thanks, Tim. If you jump into the first slide, thank you. A little bit of a different story to the others who have preceded me. I want to start today by outlining the themes of our presentation. The first theme is that our established clinical trials business is growing substantially. In that clinical trials segment, Cogstate offers our technology and associated services to pharmaceutical companies for use in clinical drug trials. For the year to 30 June 2020, our clinical trials segment has delivered the best annual sales result that we've ever recorded. That was US $46 million of new sales contracts in that 12-month period. At the end of September, the quarter just finished, Cogstate has contracted revenue in excess of US $42 million that will be recognised over coming period. So that segment's in really good shape. The second theme, and perhaps the most exciting aspect that we'll discuss today, is our emerging healthcare business. Just over 2 weeks ago, Cogstate announced a global license agreement with global pharmaceutical company Eisai that will forever change the commercial opportunity for Cogstate, and it positions us to launch the first ever widely adopted digital assessment of cognition. And then the final theme that I want to go over is the financial impact of the operating business and the increase in shareholding value that we expect to be able to deliver in the coming years. The upfront royalty receipt related to the global license agreement that we've just signed, along with the growing revenue from our established clinical trials business, positions us to create significant shareholder value in the coming years, and I want to share that with you. So we can just jump to the next slide, please. Cogstate was founded 20 years ago against the backdrop of an aging population and the increasing incidence of Alzheimer's disease and other dementias. Our vision was to develop a technology that would allow us to take cognitive assessment beyond specialty medical centres and into the community, where it could help meet the need for early detection of memory impairment. Our ambition was to make regular cognitive assessment as simple and as commonplace as measuring blood pressure, something that everyone should be able to do periodically as part of good healthcare. We wanted to avoid problems that plague traditional cognitive assessment, ensure that our tests were repeatable, and that they didn't discriminate based on language or culture of the individual being tested. In other words, we wanted to make it really simple. We wanted to be able to test anyone, anywhere, at any time. If we just jump to the next slide. Since launching our technology into the clinical trials market in 2004, the majority of our revenue has come from that business segment. And in that segment, our customers are pharmaceutical companies seeking to determine the impact that their investigational compound has on cognition. So clinical trials is our established business, and that generated US $21 million of revenue in financial year 20. It's a project revenue model that provides us with great forward visibility and predictability of our revenue. The length of the clinical trial provides a revenue tail that we can build on from year to year. Healthcare, which is the use of our Cogstate technology to measure brain health in the community, is our next horizon. It was the basis of our original investment proposition and is starting to become a reality as we get closer to the release of disease-modifying therapy for Alzheimer's disease. This is more of a subscription-based software revenue model sold through strategic partners such as Eisai, who have other revenue. And in the case of Eisai, that revenue is revenue from a therapeutic program. And that therapeutic program is then tied to the adoption of Cogstate software. In both of these segments, Cogstate relies on data from more than 600 peer-reviewed publications, and that comes from decades of collaboration between academic researchers and the Cogstate science team. We just jump to the next slide. And what we're going to talk about now is that clinical trials segment. Thank you. In the clinical trials division, Cogstate enters into sales contracts with pharmaceutical and biotech companies for the provision of our tech and services for use in their trials, as I mentioned. The idea there is to determine the extent to which those investigational compounds impact cognition of the patient population. And we work across a range of indications as we've just depicted on this slide. In this market, Cogstate technology can be used both as an efficacy and as a safety endpoint. In the context of efficacy in things like Alzheimer's disease, we're attempting to determine if the potential therapy has improved the cognition of the patient population. In safety endpoints, what we're trying to do is to determine if the potential therapy has an unintended side effect, which may make cognition deteriorate. And we see that in indications such as oncology. Thank you. Next slide. The sales contracts that we execute in the clinical trial segment differ in value for each clinical trial, depending on the scope of the technology and the services that we provide, as well as the complexity of the study. An increase in the total value of sales contracts executed will increase revenue backlog and will over time result in an increase in revenue recognised from Cogstate. But there is a lag between that execution of sales contract and recognition of revenue. Revenue from the sales contract is recognised over the life of the clinical trial, and the life of clinical trial can vary from a few months for an early phase study to 4 to 5 years for a large phase 3 study. For the year to 30 June 2020, the most recent financial year, Cogstate executed $46 million US of clinical trial sales contracts. As you can see there, the result is an improvement over 150% on the prior 2019 year, but a 28% improvement on the previous record that was set in 2018. The level of sales contracts executed is a reflection of the accelerating demand for Cogstate scientific solutions and technologies over recent years. We've seen continued sales growth in areas such as rare disease indications, and we've seen a tremendous rebound in investment in Alzheimer's disease over the last 18 months. And that was an area that was really negatively impacted during the 2019 financial year because of a series of clinical trials failures, and you can see that impact in terms of the bookings in that 2019 year. So after a really disappointing 2019, through 2020, we really picked up where we left off at the end of 2018. Next slide, please. So to talk now about the healthcare segment of the business, and as previously mentioned, Cogstate works across a range of indications, but there's no doubt that the application of our technology as a screening tool for memory loss that may be associated with Alzheimer's disease represents an enormous opportunity for us. Globally, Alzheimer's disease is a huge societal problem that strains healthcare budgets, reduces quality of life for an increasing number of older people, and places enormous burden on both healthcare systems and loved ones who end up becoming carers. Alzheimer's disease is the most significant untreated chronic disease in the world today. The number of people living with Alzheimer's disease increases every year, and to date, there's been no therapeutic treatment that could alter the course of the disease. So as the world's population rapidly ages, the societal impact of Alzheimer's disease and the related dementias is staggering. The early detection of cognitive impairment is critical for meaningful intervention around care planning, lifestyle modifications, and symptomatic treatments. And it's going to be especially critical in the advent of an approved therapy that can change the course of Alzheimer's disease. And as an industry and as a society, we've never been closer to the release of a disease-modifying treatment for Alzheimer's disease. There's a number of promising monoclonal antibodies in late-stage development. So the potential for a disease-modifying therapy for Alzheimer's disease has meant a huge increase in interest from pharmaceutical companies looking to identify those people in the community that are suffering from memory loss. Next slide, thanks. So it's against that backdrop that we're really pleased to announce a couple of weeks ago the global license agreement with Japanese pharmaceutical company Eisai. This license agreement expands upon an agreement that was entered into just over a year ago by the two companies. In that time, ASI have proven to be a really supportive partner for Cogstate that's committed to building an entire ecosystem for dementia patients and their families. And ASI have solutions targeting everything from the identification of the first signs of memory loss, such as Cogstate, to the development of therapeutic treatments, as well as a range of lifestyle factors in between that. Under the terms of the license, ASI will be responsible for marketing Cogstate technology in all countries, including all existing technology, but all future improvements to our technology as well. The agreement will exclude our clinical trials business, where we'll continue to offer our technology and services independently there. It's a 10-year license on a country-by-country basis from the date of the commercial launch in each country. And ASI have committed to launch in the US within 1 year from the execution of the agreement, the EU within 3 years, and China within 4 years. We actually think they'll pretty comfortably exceed those timelines, but they're the outer limits. ASI will have an option to terminate the agreement after 5 years under very specific certain conditions. Under that license, ASI will pay Cogstate a minimum royalty payments of $45 million US over the next 10 years. That includes a $15 million upfront license, as well as $30 million of minimum royalties. The minimum royalties increase from year to year, as you can imagine, but they'll total $10 million over the first 5 years, from year 1 to 5, and then another $20 million from years 6 to 10. And similar to the agreement that we executed in Japan over a year ago, ASI will fund all software development work required to further develop or improve or alter our product to make it suitable for each country. And ASI will manage all regulatory issues in response to that. The resulting data from the use of the technology will be jointly owned by ASI and Cogstate. Just flick to the next slide, please. The commercial opportunities are substantial for this. So there are a range of opportunities from direct to consumer, so measuring people in their own home, where they might access a website that says, are you worried about your memory? Going in for an annual health check at their physician's office, where that physician may be looking to identify patients who are suitable to go on to therapy. And then once we put people on therapy, the continued monitoring of that. Thank you. And the next one, please. So over the last 12 to 18 months, the commercial opportunities that exist for Cogstate have completely changed. We now have this opportunity to close the loop between clinical trials, the screening for memory impairment, and treatment options available to patients suffering from Alzheimer's disease. And that's a really important aspect that we can, the use of our technology in the clinical trials provides the scientific evidence, the commercial and scientific validity of our technology, which encourages the use as a screening tool, which then becomes a really important aspect in terms of the treatment options for patients. And the use of that as within those settings actually encourages the use of our technology in clinical trials. So we think this is a really important virtuous loop. So just to finish up, we really begin a new era for Cogstate. The global license of our technology to ASI in the healthcare segment allows for the global launch of our technology to individuals and physicians. ASI have proven to be a great partner, and we're really excited about that. Our core clinical trials business has experienced significant growth over the last 18 months. We're really well positioned from a cash perspective. We'll be banking that US $15 million within the next couple of weeks. So taken together, we're really confident that Cogstate will deliver a profitable 2021 financial year, and we're really well placed to deliver value creation for our shareholders into the future.
Thanks, Brad. We've got some good questions. I suggest you've got a few astute shareholders online here. We might have to follow up with a few later on. But first question, in 2020, the healthcare segment had about 2 million in sales, much higher in previous years. $1 million was from the ASI deal in Japan. Where'd the other $1 million come from?
So from both sale of product as well as just ASI support of, so payments from ASI in respect of other activities that were being undertaken. Sure,
okay. And a question, it's encouraging to see JD Health, ASI JV developing platform using Cogstate technology. Does this qualify as a start of commercialization in China? Hence, can we expect to see 10 million from ASI in 1 to 5 years as a minimum royalty?
So I'll pick apart that question. The minimum royalty is guaranteed years 1 to 5, 10 million, regardless of what happens.
Yeah.
In terms of the partnership that ASI has announced in China with JD, it's a really important stepping stone to commercial launch. It doesn't qualify as commercial launch at the moment, but it does give you indication that that 4-year minimum timeframe that they have to launch commercial product in China is going to come, substantially forward from that 4-year timeframe.
Understood. And what's the status of Japanese regulatory clearance? Does that delay ASI's commercialization in Japan?
So yeah, still waiting on ASI are working through that with the Japanese regulator at the moment. It hasn't been a priority until now. We feel that that's under control and the time frame is manageable, really focused around that clearance and preparation for launch, tying into therapeutic launch. So at the moment, most of the focus in Japan is on the online and the consumer segment through the NoNo product, which is the Japanese rebranding of Cogstate in Japan.
Understood. And finally, who and how far ahead of you are you of your competitors in the field of kind of clinical trials and for new software services in emerging healthcare segment?
Yeah, so we feel that our scientific, there are more than 600 peer-reviewed publications supporting the validity of our technology, puts us a long way ahead of our competitors. The other aspect now that we feel really strongly about is our sales and marketing and commercialization strength that comes with the partnership with ASI, a company that potentially has, multi-billion-dollar revenue streams to support in terms of an Alzheimer's disease therapeutic, and the role that Cogstate will play in terms of patient acquisition in respect of those potential therapeutics means that we're a long way ahead of competitors in terms of what they will be able to spend on sales, marketing, commercialization compared to somebody who has a partner with, multi-billion-dollar revenue streams.
Great, thanks, Brad. That's all we have time for. There's a number of questions that I'll shoot through to you after the presentation, and perhaps we could follow up with some content on ShareCafe, but thanks for your time.
Beautiful, thanks, Tim.
Okay, next up we have Manhattan Corporation, ASX code MHC, market cap of around $34 million. It's got a 1-year return of around a lazy 400%. Manhattan Corporation is a mineral exploration company based in Perth, WA. The company explores for uranium and gold. The strategy is to grow shareholder value through decisive project acquisition, innovative exploration, and iron ore discovery. We have with us the CEO, Kel Nelson, who is also a qualified geologist. Kel, over to you. Thanks for your time.
Thanks, Tim. Just a quick forward-looking statement. We'll be making some statements which are looking forward, so I encourage you to read that at some stage. So to give you a bit of a background, the Tibooburra gold system was originally founded by Jens Balcourt, who was the exploration manager for Regis for a number of years. And he led this ground as similar to what he did at Duketon, where he basically walked in, followed the structural system and targeted the place and walked away with 8 million ounces of gold roughly within that time frame. So to give you a background of it, so Tibooburra itself, we have a tenure holding of about 2,000 square kilometres within far northwest of New South Wales, where we cover 220 kilometres of strike of proven gold-bearing structures that has the potential to host multi-million ounce deposits. It's a similar geological setting to that of the epizonal orogenic Victorian goldfields, such as the higher grade Fosterville system, and it's had very, very little work to date. Manhattan is about to kick off, probably starting next week, a 30,000 metre drilling campaign based over the next 4 to 5 months, which is going to see a lot of news come through to the market and give us a really great opportunity within the system. And this is following up recent drilling that we've done at a place called New Bendigo, where we've intersected 30 metres at 4, including 5 metres at near 21 and 7 metres at 18 in shallow systems at surface. So to give you an idea, so in the top left-hand corner, part of that figure, you can see the tenure package. So it's a fairly large package, and it really covers the 2 main gold-bearing structures within that system. So it's well serviced by sealed roads from Broken Hill, with regular scheduled flights into the area, and the township of Tibooburra to the northwest, which is on the Grey Nomad tourist trail. So if we go to the next slide, please. So this is what we sort of see. So basically, that's our tenure package to date. And we run pretty much from the south down at Mongrel, all the way up through to the New Bendigo and further up to what we call Pioneer itself, and also along the Coonaberry. So these are really 2 distinct gold conduit fault systems that run through there. It's mineralized all the way through those systems, and we are looking for large gold targets with multi-million ounce potential within that system. So to run it through, down, can I just go back a bit? So down at Mongrel, we have basically distinct hydrothermal breccia systems associated with gold, a 6-kilometre soil anomaly, which just needs drilling to do. And then we can follow that all the way through Coonaberry Gap and North Gap, where we have significant mineralisation in old workings. And then we come up to where we're probably more advanced and what we could term the old Albert Goldfield, up around the New Bendigo and Big Ego system itself, where we've been drilling of late. So if we just run to the next slide, please. So at New Bendigo, this is probably our most thing. So New Bendigo sits on the southern part of this sort of structure. And then the further north of that, we have Pioneer. So New Bendigo, we went in there, we've done 2 drill campaigns to date, really just targeting the shallow mineralisation. We've extended the mineralised footprint and controls over 600 metres to date. And we have some significant intersections within that, including the 30 at 4, which included the 5 at 21, the 7 at 18, and as you can see, 5 at 7.71, and a few other intersections. That's all from RC and diamond drilling, and that's where we're going to go and target some further RC drilling next year. So the idea, so if New Bendigo itself sits in a 5-kilometre, can I just go to the next slide? So New Bendigo itself sits within a 5-kilometre corridor, sheared corridor, where we've only really tested the 600 metres today. It's 2 zones with an old working structures and everything else that extend for 2 kilometres in one zone and 1.7 kilometres in the other zone from the old guys that have been working the system. And it's never really been tested to its full extent over that strike. And to the north, about 8 kilometres to the north, there's also more further workings where 25 grams per tonne rock chips have been tested, taken, and that has had no drilling to date as well. So we're just going to go in and chase it extensively and drill the whole thing. So I might just skip to the next slide. And so the next few slides sort of run through the New Bendigo story and the targeting of the southern licenses and everything else, and where we see the big input drivers within this system. But I'm going to roughly, given the time frame that we have, I'm going to skip through these and head off down to slide 13, if I may. Keep going. Yep, keep going. Keep going. Keep going. That's the one. So on this slide, unfortunately, it's a little bit covered by my things on that, but you can basically see in the pink outline, these are the geochemical anomalies that exist over a 20-kilometre plus strike length. So in the southern extent of that, we have New Bendigo, where the soil anomaly extends for over 5 kilometres, and up in the north, we have the Pioneer system, which is an old mining structure that goes for over 2 kilometres, where they started installing a battery back in the old goldfields itself. and where drilling has returned 3 meters at 4.89 and 2 meters at 14.7. And at Pioneer, I actually think that the better part of that system has not been tested to date and needs to be drilled extensively further, especially to the south. The new Bendigo itself, you might see a little red shaded area within that 5 kilometre long anomaly. That's the 600 metres that we've defined to date in drilling. It's open in all directions, north, south, east, west, and down dip, and needs much more RC drilling, which is planned to take place in the early part of next year. So the white dots that we see within that map is testing the system. So what we are trying to do now is, we know we have a mineralized system. We're probably on the edge of establishing a resource. And now what we're trying to do is enlarge that resource base and make it much larger and increase the grade system of that by targeting the higher grade mineralization. So the white dots, we're just going to extend the footprint of the drilling using air core drilling, which will give us a relatively cheap, clean way to go. And then we're going to move up the structure and expand the footprint so that we get through that area. The other thing that we're doing at the moment is we're going to come in and do some diamond drilling at New Bendigo itself. Now, this is really targeting the high grade intersections that we have to date. So we will be twinning and drilling in between high grade hits to establish the structural controls of the mineralization, because we know we have a structural component in there which is controlling our high grade. It's a high strain feature that runs through the system. And by targeting that, we can, when we come back and do our RC drilling, we can really hit and chase those higher grade systems going forward and move the grade up from, you know, something that may be a 2 gram system to a +3 or 4 gram system. And that's what we're sort of doing. The air core will commence next week, and hopefully towards the end of next week, maybe early next week, we'll start that diamond drilling. So there's going to be further news coming through that, and we will continue drilling these targets up through till Christmas and then restart early next year is the plan. On top of that, we also have another trend, which is the Big Ego trend and Big Ego Northwest. And we know this is highly anomalous for gold. It comes through that system and pops up at hot soil with an extremely elevated amount of geochemistry in gold. And we just need to drill that. There's a big decentralized magnetic feature at Big Ego, demagnetized feature at Big Ego. And the New South Wales survey has identified that demagnetization within Coonaberry is actually a big indicator of the gold. So that's where we sort of sit. Lots of meters that we're going to go in. There's 20,000 meters of air core to be done. We'll be doing about 1,000 meters of diamond, and we're going to be following that up with a further 10,000 meters of reverse circulation drilling next year. So pretty heavy, and we'll be going at it from there. So we're fully funded for that, and we'll go from there.
Thanks, Kel. You've got a big drilling program ahead. I know you just touched on funding then. Can you talk to kind of funding and timelines moving forward?
Yeah, so currently we have 3.4 million in the bank. The drilling that we've outlined is about $2 million, and this will see us through to March, April next year in this drilling campaign. And then we'll be driving, and it'll be results driven from there. And we expect to get some significant mineralization in this program.
And what is the, what are your thoughts? You're a geologist. What do you think of the, you know, what is the potential for the new Bendigo to Pioneer strike in terms of ounces?
I haven't seen a project like this in Australia in terms of a control aspect of a fairly mature gold system, orogenic gold system for in probably my lifetime. You look at a lot of the West Australian things, they're quite patchy, you know, multiple tenements spaced apart. On this, we control the gold feeding structures for over 220 kilometres. It is a significant project, and it's going to deliver some significant value. And Jens and I believe that it has the potential to host multiple million ounce deposits within the system. We just need to work it.
And how do you acquire packages like this with so much potential?
Oh, it's quite an interesting one. I actually went to university in New South Wales, and to be quite honest, we never really looked past Broken Hill. That was where all the action was. So this came about because Jens and another gentleman went out there looking for base metal projects about over a decade ago around Broken Hill, and they stumbled across what they refer to as the old Albert Goldfield, and then there's the K Runner and Nugget Field and a few other things within this package. And they just went, wow, this is amazing. And they started acquiring the package 10 years ago, and we've added to that package since.
And it is a big land package. Kind of, what is the status of kind of traditional owner access to the land and for later development? This question here: the New South Wales government has sometimes provided kind of roadblocks for development along the New South Wales.
Yeah, this area is centred on what we call Western land leases, which is probably similar to a pastoral lease in Western Australia. And from there, it's under those agreements, we get access and a few things. We just have to go through that process. In terms of the native title and traditional owners things, native title has actually been made extinct in a lot of this area because there hasn't been an association. So, and the land access and the historic aspects are very, very tight. So
that's great. Now, Kel, that's all we have time for. Appreciate your time and good luck out there. We expect some news from your company moving forward.
Thank you.
Great. That's all we have time for. Appreciate your support. We have big audience each week. See you again next week. Thank you.